More than 60% of Americans are living paycheck to paycheck, according to Lending Club. And now with tax season in full swing, filers are looking to get their best returns and get the most back for their money. In the PBS show Opportunity Knocks, expert financial coach Louis Barajas works with families to understand their goals and challenges to help them overcome financial hardship. He's joining us now to go through the latest rules and deductions from the Internal Revenue Service. And this segment is brought to you by Fidelity Investments. Louis, thank you so much for being here. Obviously, there is a lot to sift through. So if you're just looking at sort of top line, big changes that the IRS has made that people need to know about, what would sort of be your top three?
Well, I'll share with you that I think the IRS is actually uncomplicated stuff, right? Because they keep raising that standard deduction. And so the standard deduction now, like for married couples, is $25,900, and they raise it for single filers as well to $12,950. So what does that mean? That means that people in the past used to itemize. They used to take the medical bills, mortgage interest, property taxes, charitable contributions. And actually for probably about 80% of Americans, they can't even qualify for that anymore because the standard deduction is just so high, right? So we want to make sure that people are not intimidated and at the end of the day that they're taking either or. So, do the calculation on that. That's called the Schedule A, itemized deductions. But most of the time, I guarantee you it's probably going to be the standard deduction. So don't worry too much about it. Now, what's going on this year real quick so everybody understands is that we've had a lot of issues with weather. And so right now, the IRS actually declared yesterday, or a couple of days ago, that there's an extension for Alabama, Georgia, and California for the deadline is now October 16th. Believe it or not, they had moved it to May 15th and now October 16th. But you have to be in a federally declared disaster county. So you can go to irs.gov and find out the information for you. So you may have a longer time period. What hasn't changed is IRA deductions, right? We're here on Yahoo Finance, and people need to make their IRA contributions by April 18th. So the deadline is not April 15th this year, it's April 18th. And so your IRA or Roth IRA contributions, it stayed the same of $6,000 that you can make. And if you're over 50, there's a catch-up provision that's for $1,000. Now, but for 2023, they're moving it up to 6,500. So if some of you are already who are listening to us or watching this have an amount where you're putting money away every month, you can raise that to $6,500 for 2023.
Oh, wow. Louis, there are so many people that have started a business as well over the past 2 years. And we've continued to kind of chronicle their stories. But for many of them, this is big time, too, because they're going to have to start filing as self-employers. So what are the tips that you have for them?
Yeah, so if you're self-employed, right, for the first time, and if you haven't created like an entity like a LLC or a C Corp or an S Corp, and you're just a sole proprietor now, you're going to file your tax returns on the same individual 1040 return, but it's going to be on the form Schedule C as a sole proprietor. So in there, you will be able to put all the income that you've received. You're going to be getting 1099s. That's where you enter the information on that Schedule C, the sole proprietorship. Now, what people don't know is that they can take any expenses that they use for that business that was ordinary and necessary. So most people work from home. I'm working from home, right? If I've got a Schedule C, I'm able to take a portion of the where I work my area compared to the entire house, and I can depreciate that. I can take utility expenses. If I'm paying a mortgage, I can take expenses based on that percentage off of my self-employed income tax. I can take the property taxes, that percentage. And people don't understand that they can do that. So there's a lot. So if it's for the first time, you might want to seek a professional to help guide you to look for all the deductions that you could possibly take. And then you can basically do it going forward.
Louis, I was going to ask you that when you need to hire someone, because obviously, especially if you are on the lower income side of the spectrum, you don't really want to shell out more for an accountant to do your stuff, or maybe even for one of the e-filers, right? So how do you figure out if that's what you need to do?
I will share with you. I've been doing tax returns since I was 14 years old, believe it or not, and I'm 60 years old right now, 61. So I've been doing it for a long time. So right now, I will share with you that if you actually do have a business, so it's the first time you've created your business for the last couple of years, I would seek a professional. If you own rental property, I would seek a professional. But if you're a W-2 employee, now if you go to irs.gov or any other site right now, that they're offering free tax software that you can prepare your tax return, because again, the standard deduction has made it very easy. But you own your own business. Obviously, if you have your own corporation, if you have rental property, I would definitely seek out a professional, because there's so many deductions that you can take that most people are not aware of. I can't tell you how many times I've had to go back and amend tax returns for people who've done their own returns, who had their own businesses or their own rental properties, and they forget to depreciate the property. They forget to take what are called, like, for example, Section 179 deductions that most people don't even know about, means that instead of when you buy like a computer, instead of depreciating it, or you buy a printer, you can write it off, but you have to take an election called the 179. Most people will not know how to do that. So that's when you seek a professional.
Louis, while we have you, there's a lot of crypto hodlers out there. They're going to have to figure out exactly how they file this year's taxes, given some of the declines that we had seen last year in the crypto market. What advice do you have for them?
Well, again, most people that have crypto, again, if they bought crypto and then they sold crypto, they're going to have to report it just like the sale of a stock, the capital gain, right? But believe it or not, even if you didn't buy or sell it, on the tax return, there's a question that they ask you now, is that did you make any transactions with crypto? And you're going to have to answer yes if you did, otherwise there'll be a penalty. So you're going to treat it just like if a sale of a stock, right? Did you buy it and did you get rid of it? I mean, did you have losses? You can take the losses as well. So it's treated just like a stock on your tax return.
Opportunity Knocks financial coach Louis Barajas, thank you so much for taking the time and for that tax advice brought to you by Fidelity Investments.
Thank you. And go to opportunityknocks.net. That's where you'll find all our information. Thank you.
Done deal. Got my laptop in front of me. Going to go right there right now. Appreciate it, Louis.